Joe Anderson and Al Clopine of Pure Financial Advisors have the answers to your retirement plan. This is Your Money, Your Wealth.
And welcome to another edition of Your Money, Your Wealth. Joe Anderson here. I'm a certified financial planner and president of Pure Financial Advisors. Alongside the big man, Big Al Clopine, welcome to another great show. We're heading towards the end of the year. Here's one thing that you're probably not thinking of. You're probably thinking of the holidays, Thanksgiving, but wait, here's the deal. You still have a couple of months to reduce your tax bill. If you go to your accountant, they're probably going to say, you know what? Hey, come to me in April. That is too late. 95% of the strategies that you need to do to implement to reduce your tax bill has to be done before the end of the year. That's what's on my mind today. For a lot of you, taxes are going to be an issue. If you don't know this, tax rates have gone up for the highest taxpayers. Also, when you look at capital gains tax, it went from 15% to 20%. You have the health care bill, that is another 3.8%. Now they're squeezing your deductions and exemptions, so a lot of us are going to be paying a lot more in income tax. There are things that you can do. If you take a look at the statistics, it's pretty cool, is that more people are making more money. If you look at 2008, only 25% of us got a raise. If you look at 2013, 2014, about 96% of people are getting a raise. What does that mean? That means higher income. So that's the good. The bad is you're going to pay more income tax on that income. A lot of you are getting stock options. Companies have record profits. Things are looking pretty good in the U.S. economy, so that's good news. But now, why don't you keep as much as you possibly can and not give so much unnecessarily to Uncle Sam? To help us weed through all this mess, let's bring in the big man, Big Al Clopine. So we got good news and we got bad news. Good news is that people are making a little bit more money. The bad news is guess what? They got to pay a little bit more money in income tax.
Well, that's absolutely right. And that's what's going on right now because companies are more profitable and they're starting to share some of that. Finally, they're starting to share some of that with the employees, which means we're getting raises, we're getting bonuses. In some cases, there's stock options and otherwise. And have you ever gone to your accountant when you had a good year and said, what can I do? How can I save taxes? And did your accountant say, well, don't worry about it. You made more money, just pay more in taxes. I'm telling you, that's not the right response because there's a lot that you can do. And looking at some of the things that are going on, as I mentioned, you're getting raises, there's bonuses, there's stock options. In some cases, some of you are selling stocks and property at gains, and you got these big tax liabilities. Here's what I want you to think about is between now and December 31st, you have some strategies. You've got some things that you can do to reduce your taxes, but you have to act now. And Joe, you're absolutely right when you said about 95% of the strategies have to be implemented during the tax year because there's very little you can do January 1st. You got to act right now.
How long have you been a CPA, Al?
About 30 years.
30 years. So you're pretty good at saying, you know what, hey, don't worry about it. You made a lot of tax, don't just pay it.
I hope I wasn't one of those way back when I had my practice.
So what, you were a CPA for 30 years, so you
Yes.
understand the tax code fairly well.
Yes.
And now people are actually making a little bit more money. That's a good thing.
Yes.
But let's talk about strategies on what they can do to make sure that they can mitigate the tax bite as much as they can. Because you have only a few months, a month and a couple of weeks left to make sure that you can do everything possible. And let's start out easy. You know, I think the number one thing that people should take a look at, have they maxed out their 401k plans?
Yeah, I think that's absolutely right. And when you look at what's available, your 401k plan, your 403b plan, they have the same rules. You have until December 31st to get these things maxed out. So the total that you can get into these plans would be $17,500 or $23,000 if you're 50 or older. So you want to look at where you're at. Look at your latest pay stub. See if you can get some more going into that 401k or 403b.
Yeah, for a lot of people, they're going to have to put their whole paycheck in.
Exactly.
So then if you have some cash reserves, right, take a look because you only have maybe a few more paychecks. You want to make sure that you can max those out to reduce your taxable income. And if you have other cash laying around, because here's the problem. You can't fund a 401k plan through cash. So if you look, oh, here, I still have room in my 401k of like $5,000, $10,000, $15,000 or whatever it is. I can't just cut a check and put it into the 401k plan. It has to come from your paycheck. So you want to make sure that you take a look, how much room do you have, and then maximize that as much as you can. Another thing too, if you're over 50, you have a catch-up provision, which is another $5,500. But here's the problem with most 401k plans. You have to elect to do the catch-up provision. A lot of times people don't elect. They think they're maxing the plan out, but they're not fully utilizing the pre-tax contributions.
Well, that's absolutely right. And what that means then is if you're over 50 and you want to get more into that 401k, and you should if you can, then you do have to elect a special additional election. That actually happened to me a few years ago. I got $17,500 in and it stopped. Luckily, I had plenty of time to adjust it. But here's the thing, is right now you can still affect your taxes in 2014. Come January 1st, you can't with regards to these retirement accounts. So another thing you want to think about, not all of you have 401k plans or 403b plans. So how about an IRA or a Roth IRA?
But this is the stupidest thing ever. I mean, we were talking about this on our radio show a couple of weeks ago.
Yeah.
Is that, all right, let's say that Al and I are neighbors. He works for a company that has a 401k plan. I work for a company that does not have a 401k plan, and we make the same income. Al can shelter 17, well, he's over 50, so he can put in $23,000. I can only put in $5,500.
Thanks for that, by the way.
But the makeup is helping you, man. I mean,
people thought I was a lot younger.
He's got a comb in his back pocket that was straight out of 1950. You should see the pre-workout.
You gotta love it. You gotta love it.
It's beautiful.
You gotta love it.
We got to show them.
Yeah.
But here's the deal: is that if I can only put in $5,500, even though we have the same income, just
see. I mean, don't y'all wish you had one of these?
Yeah, right.
Yeah.
Right. Oh my gosh.
I've had it for 90 years.
Yeah, I know. Oh boy. So,
all right. So I was trying to talk about IRAs.
Well, it just contributed to the IRA, but the problem is.
Yeah, you're right. If you don't have a 401k, you can't do near as much. But take a look at this. A 50-year-old can put $23,000 into their 401k. They can also put $6,500 into their IRA. Now, if they don't have a 401k, you're just stuck with the IRA. But realize this, a 33% tax bracket, you're going to save a lot of money. And 33% is kind of an average tax bracket. So you save over $7,000 per year maxing out your 401k at 50, and you save over $2,000 maxing out your 401k when your IRA in terms of taxes in the current year.
Right. Now, if you go back to that slide, Ty, if you look here, all right, so let's say Al we're both 50 years old, let's say, and he's got the 401k and I have the IRA. This is why this system is so screwed up. Al can put in $23,000, I can put in $6,500. Look at his tax savings. He saves almost $8,000 in tax. I save $2,000. If we have the same rate of return, right, he's got almost $1 million over 20 years. I have $265,000. So there's problems in government when it comes to figuring out these retirement accounts. And then now we have the MIRA, whatever that stupid plan is, where you can put $4 into it and then it will grow tax-free. Here's the deal. Depending on if you're self-employed, if you are an employee of a firm, if you have a 401k, if you don't, there's still a lot of things that you can do. You just got to think outside the box. This is what I want you to do. I want you to go to our tax planning workshop. Al and I have done this for many, many years. We have several hundred people that show up. We would love to have you. It's at the Mission Valley Sheraton. It's coming up in December. All right, so here's what you got to do to register. You can go to puretaxclass.com. I don't know if anyone can see that flyer. Or you can just call our number to register. It's free of charge. It will fill up. Al and I will spend 2 hours with you talking about all the different strategies that you need to know to make sure that you're putting money into your pocket versus Uncle Sam's. The system's not fair, but you have to understand the code for you to benefit from it. Here's the number, 888-994-6257. That's 888-994-6257. Call that number right now. Get your spot coming up December 3rd, I believe. And it's from 10 o'clock to 12 noon. It's 2 hours of great tax talk. I bet you're so excited to go. All right, we're going to take a break. We got a lot more to go. If you're thinking about some strategies, stick around. You're watching Your Money, Your Wealth.
Hi, I'm Matt Balderston, Certified Financial Planner with Pure Financial Advisors. Did you know the cost of an assisted living facility has risen to an average median rate of about $3,300 per month? That's $39,600 per year. The highest median rate is in Alaska, where it's $6,813.